Welcome back to Financial Foundations, your monthly market roundup right here in Vermont, where we unpack the headlines, cut through the noise, and focus on what actually matters for your financial life. I'm Dom, and this is Steve. Now, if you're feeling like the economy is tough to keep up with lately, you're not alone. Between interest rates, energy prices, and insurance costs, there's a lot to sort through. And most of the coverage out there doesn't exactly make it simple. That's where the show comes in. We're two local fiduciary planners, meaning we don't sell products, we don't earn commissions, and we don't answer to brokerage. Our only job is to serve Vermonters with clear, objective guidance.
And each month we break things down into a few key segments. We start with three major headlines and how they connect to your day-to-day life. Then we dive into what we call the concept corner, where we explain one topic that keeps popping up in the news. From there, we head into our policy deep dive, looking at what's happening in state and national legislation that might affect your financial picture. And finally, we wrap with our community corner, where we highlight upcoming local events that give you the chance to connect, ask questions, and get support. No sales pitch, no pressure. Let's kick things off with this month's headlines, and we'll start with interest rates. In June, the Federal Reserve held rates steady for the 7th straight time. Now, that might not sound dramatic, but it signals how uncertain policymakers still feel about the economy and inflation. So what does that mean here at home? Borrowing remains expensive. Home equity loans, credit cards, and personal loans are still carrying high rates like we've talked for months. And that's tough for anyone trying to buy a home, especially in high-cost areas like Chittenden or Windsor County. But there's an upside. Savings tools like CDs, treasury bills, and high-yield accounts are still offering strong returns. If you're setting money aside for short-term goals, this can actually work in your favor. The key is to avoid emotional decisions. We've seen people rush to lock in yields or stay completely out of the market because they feel paralyzed. That's where a steady plan, built with somebody who's not paid to sell you something, can keep you grounded. For headline 2, we'll take a look at insurance premiums on the rise. We've also been hearing from Vermonters across the state about these rising insurance costs. In towns like Barre and Brattleboro, homeowners are opening renewal letters and seeing big jumps, sometimes hundreds or more. And in many cases, the house hasn't changed at all. So what's going on here? A lot of it traces back to the floods we saw in 2023 and 2024. FEMA updated flood maps and insurers reassessed their risk models. And that means homes in places like Montpelier, Londonderry, and Barre are now flagged as higher risk, even if the homes never flooded before. Higher risk means higher premiums, and as Vermonters, we're bearing the brunt.
And it's not just home insurance. We're seeing increases across the board: auto, health, life, even long-term care. You can have a perfect driving record and still get hit with a rate hike. I know I did. Or your workplace health plan suddenly costs more out of pocket. And these changes aren't about individual behavior. They're systemic. What's tricky is the kind of advice that often shows up along these changes. Get this rider, switch to this carrier, lock in this policy before those rates go up again. Some of it is helpful, but some of it's also driven by personal motive.
And that's why fiduciary advice is so important here. A fiduciary doesn't sell products or collect commissions. They help you understand what's changing and how to respond without the pressure. When the system shifts, your plan shouldn't collapse. It should bend with you.
Exactly. So whether it's your home, your health, or your retirement plans, don't let the rate hikes throw you off course. The right financial plan makes room for the unexpected and gives you a path forward. And speaking of unexpected pressures, that takes us into our third headline. We're going to talk about energy, because prices are rising again, and it's not just a seasonal shift this time. The cause is international. Tensions between Iran and Israel have raised concerns about a potential blockade in the Strait of Hormuz, This is a narrow channel that carries nearly 20% of the world's oil supply and around 40% of what China imports. So even though the U.S. produces a lot of oil domestically, global supply disruptions affect us all. Oil prices are set by a global market. So even a threat of instability can push costs up fast.
And here in Vermont, we feel those price swings quickly. Many of us rely on heating oil or propane. We drive long distances to get to work, school, or medical appointments. And for rural towns like Island Pond or Arlington, energy isn't optional, it's essential. And that's why global headlines like this don't feel far away. They show up in your fuel bill. And when prices rise fast, it's easy to feel overwhelmed.
I know I felt pretty overwhelmed today when I ordered my couple tons of pellets and they gave me the price, which was up 25% from last year. So, and areas like this is where you see a lot of the fear-based pitches. They usually start with commodity ETFs, inflation-linked annuities, oil-themed funds. Some have a role, but only if they're part of a thoughtful, personalized strategy. So be mindful when talking with folks.
Yeah, and I think that's where financial planning from a fiduciary can help by offering guidance that's rooted in your goals, not in commissions. And when you're grounded in a solid plan, you don't have to chase every market move. And that brings us to this month's Concept Corner, where we break down the role that oil still plays in the global economy and in your everyday life.
Perfect. Back to the oil conversation. So if you've ever wondered why it still gets so much attention, even with the rise of electric vehicles and other renewable sources, you're not alone. It's because oil is what's known as a benchmark commodity. So you can think of it like a plain bagel at a breakfast restaurant. It's not flashy, but it is used in a lot of those sandwiches. Oil's the same. Its price affects things like transportation, agriculture, manufacturing, even groceries. So when those oil prices spike, it creates a big ripple effect across the entire economy.
And like I said before, for Vermonters, those impacts hit quickly. We heat our homes with fuel, we drive long distances, and we don't have easy public transit alternatives. So a change in oil prices becomes a change in your monthly budget. But that volatility doesn't mean you need to overhaul your whole plan. The best strategies are built to handle the ups and downs without falling apart.
Exactly, Steve. But still, the moments often bring out solutions or proposed solutions that might prey on that fear, called crisis-proof investments. These are, could be insurance contracts that are tied to oil prices, or high-fee portfolios labeled as inflation hedges. They're not always wrong, but they're not always right. And like I said before, it's good to be mindful when talking with someone to see where their motive actually lies. And without fiduciary guidance, it's even harder to know that difference.
And that's why we focus on education. The goal isn't to avoid risk completely, it's to understand it and build a plan that works even when the headlines are loud. And Dom, many Vermonters are diversifying their energy plan just like they do with their investments by adding heat pumps, pellet and wood stoves, and they're more better to handle the price swings with different energy sources at home.
I know I'm thinking about putting in a fuel pump for sure next year.
Yeah, I love my heat pump, especially these last really hot days. It's kept the house really cool. All right, well, let's return to the insurance story for a minute, because this isn't just a personal budgeting issue, it's also a policy issue. So across Vermont, people are asking why their insurance premiums are rising. Even though the property hasn't changed, they may not have submitted a claim. And the answer is the environment has changed. And after the major floods of 2023 and 24, FEMA updated its flood maps, as I said before, and insurance companies responded with new risk models. So towns that have experienced more severe flooding, like Barrie, Montpelier, and Londonderry, they were reclassified. And that means higher rates, even without any damage.
Exactly, and the state is stepping up with some long-term solutions. They're funding for better stormwater systems, improving culverts around towns, and using FEMA-backed grants for more resilience projects. It's encouraging, but like anything the government does, it's going to take time. And in the short term, us Vermonters are going to have to foot the bill.
And that's where planning does intersect with the policy, because the question isn't just why did my rates go up, it's how do I prepare for change I can't control? And that's where fiduciary advice matters here too. It's important to understand where advice is coming from, whether it's influenced by commissions or based solely on your needs. It's important.
Exactly. And again, the pressure isn't limited just to homes. We've seen those increases across the board for auto, health, life, long-term care, and they're all being reshaped right now. We're seeing policies being repriced, deductibles increasing, and people are being penalized despite having no claims filed. It's a whole recalibration of the entire system. And while that might have some benefits in the short term, it hits real people in very real ways.
That's right. And when the system gets more complex, you need advice that simplifies, not sells. And we're here working with someone who not only gets paid by you, that's exactly what you get, clarity, not confusion.
Exactly. Now, before we close, we're going to turn the spotlight back to the community, because while these headlines can feel overwhelming, the real work of financial planning and financial literacy often happens in quiet spaces, across a table, over some coffee, in local rooms where people feel safe asking those scary questions. And that's exactly what we saw in June. We had a table talk in Bennington. Folks opened up about everything from Social Security implications, Medicare implications, to grocery costs. And then over at the Godnick Center in Rutland, we held a Navigating Financial Hardship event, which welcomed people navigating layoffs, increased medical debt, and family caregiving issues.
Yeah, what we saw was honest, brave conversation. No pressure, no judgment, just Vermonters showing up for each other. These events aren't about products or promotions. They're about providing a space for people to ask questions and get answers they can trust.
Exactly. And, don't feel bad if you've missed those events. We've got a full lineup for July. So on July 9th, we're doing another table talk session over in Bennington at their senior center. Again, it's a place where you can go to and just ask any questions that are keeping you up at night in a safe environment, free of judgment. On the 10th, we're hosting a seminar in Poultney at the Young at Heart Senior Center, going over technology tips for retirees, how they can stay connected to their family, and be able to use a lot of the systems and services nowadays that require an online presence. And then on July 15th, we're hosting an estate planning essential seminar right in Rutland, and we're putting that on in partnership with the Godnick Center and a local estate planning attorney who's going to be there to answer the questions we can't. And on the 16th, we're hosting another estate planning seminar, no attorney this time, but that one's in Bennington at the Bennington Senior Center. And then we're wrapping up July with one final estate planning seminar. This one's got a college twist, since everybody's getting ready to send their kids back to school or off to college for the first time. We're hosting that right at the Rutland Chamber of Commerce. So whether you're just getting started or deep into retirement, there's always a seat for you. And if you want to learn more, just reach out to PEG TV or one of those organizations.
Yeah, these events are open to the public, and these are welcoming spaces where questions are encouraged. So show up, no pressure involved. And as we wrap up this June edition of Financial Foundations, we really appreciate you being a part of the conversation. The past few years have shown us just how quickly things can shift globally, locally, and personally. But that's why you get financial advice, and it matters who it comes from more than ever.
Exactly. We believe in a model that is built around people, not product. One that puts needs first and offers advice without any sort of hidden agendas or kickbacks. It's the fiduciary philosophy.
And if this show helped clarify even one question for you, we feel like we've done our job here. And if there's something you'd like us to cover next month, let PEG TV know. We want this show to stay grounded in real community needs, not just the headlines.
Exactly. And if you have any questions you want us to answer in the next episode, please feel free to send those to PEG TV as well. We would love to do a question and answer session for all of our viewers.
Great.
But until next time, take care of yourselves, take care of your neighbors. I'm Dom Stillwell.
And I'm Steve Morneau. We'll see you next time on Financial Foundations.